Hello everyone and welcome to this week's market update from ICM.com. So first we're going to start to talk about the recent movers. What were the most important movers during last week? What should we be looking for into this week, especially the top economic indicators and events. And after that, we're going to do some technical analysis on the MetaTrader 4 platform. So first, let's start with the key movers. COVID-19 remains as one of the key movers of the market. Total cases are around 23.5 million. Deaths crossed 800,000, and recoveries also surpassed 15 million. So this is in terms of numbers as per Johns Hopkins University. However, the implications of the COVID-19 on the economic recovery remains as a key thing to look for in terms of monetary policy. So we witnessed this during the minutes of the last monetary policy meetings for the RBA, Federal Reserve, and the European Central Banks. They all mentioned the continuation of the spread of the COVID-19 and its effect or impact on the COVID on the economic recovery. So this is in terms of the implications. On the other hand, we started looking for some optimism, especially after the approvals of several vaccines lately. And yesterday, the FDA also gave an emergency approval to use the plasma treatment in order to treat those hospitalized cases. And Trump also announced that it reduces the mortality rate by 35%. So what we can learn from this, especially also there were some reports stating that the Trump administration is looking forward to approve also the vaccine developed by AstraZeneca and Oxford. So this is one of the key developments also in this matter. Trump administration is trying as much as they can to reduce the impact of COVID-19 on the US economy, especially ahead of the US presidential election, since this could play in favor of Trump being re-elected again. So this is what we have to look out for. We heard that the plasma treatment isn't yet there are no clear evidence of its efficiency, but still the FDA approved it. So we have to look to look thoroughly into these kinds of approvals and how they can affect the market, since everyone in the market, all the central bankers around the world, they are looking for recovering confidence, and recovering confidence will only be available when this threat is over. So this is in terms of COVID-19. Moving to the RBA, the meeting minutes, they showed that there were no need to adjust the monetary policy. The settings remained as we know, the settings remained unchanged during the meeting. The minutes also showed that the Reserve Bank of Australia is still keeping the yield curve control and is happy with the performance until further notice. However, they also mentioned the slower recovery due to the outbreak in Victoria, so they are expecting a slower recovery in the second half due to the recent outbreak in Victoria. That's what we've been talking about. However, the board will continue to assess the coming data in order to act or to take any responses further. They are satisfied with the monetary and fiscal measures and the pace of recovery of the Australian economy, but still they have to monitor how the recent outbreak in Victoria will affect this recovery. Moving to the Federal Open Market Committee meeting, there wasn't much in the market, but still it was there wasn't much in the statement, but still it was one of the key factors, and we witnessed a rally in the dollar post the announcement of the minutes, since some bears were expecting more dovishness from the Federal Reserve. There were some overextended or overstretched bets of further accommodative monetary policy from the Federal Reserve. However, they were down following these minutes. The top things that came in the minutes were that the uncertainty remains highly elevated or very elevated, and the Fed is expecting a less robust recovery during the second half, especially due to the continuous outbreak of the coronavirus. We're seeing some numbers down in the US. They're trending a little bit down, but still they remain high relative to previous to other factors. So this is from the Federal Open Market Committee. Moving to recap also the ECB meeting minutes, the data continue to normalize as per the ECB. We witnessed some key economic indicators coming back to normal to their breakout levels. The fiscal and monetary measures help this economic recovery to remain on way. However, also they believe that the uncertainty remains also elevated, and they need more data in order to assess. So the ECB will be also adopting a wait and see tone or a wait and see stance. So this is for the top three central banks meeting minutes that were released during the past weeks. We also witnessed some improvement in the economic data from the United States, especially the housing data and the market manufacturing and services PMI, which surprised to the upside on Friday, showing that also there could be some some convergence in the views between the recovery in the United States and other regions. So we witnessed earlier the move in the euro dollar was based on the fact that Europe escaped the severity of the COVID-19 breakout. However, the United States was still dealing with high number of cases. So this displayed in the market and widened the gap between some economic indicators in the eurozone and in the United States. However, that's not what we've seen on Friday with manufacturing. The preliminary reading of the manufacturing and services PMI for August, we've seen that the services and manufacturing PMI in the euro region were almost steady or ticked slightly lower. However, in the United States, they continued higher, showing that the recovery is on the way. So this could have some impact on the strengths of the dollar against other counterparts. Moving to OPEC plus GMMC, which was the joint ministerial monitoring committee, they announced also that the top oil producers will have to be compliant with the previous cuts or expected cuts in order to stabilize the market. Also, in this regard, since we're talking about oil, we have to monitor the impact of the tropical storm and the hurricane in the United States that are emerging in the United States, since they caused the shutdown of almost 58% of the production in the Gulf of Mexico. So this could have some impact on oil prices, and we witnessed a little bit of strong rally in oil prices during the early trading hours of the week. So these are the key movers, or these were the key movers of the past week. Now let's move to highlight the top economic events to come during this week. So on Tuesday, we start tomorrow with the German GDP, the final reading of the second quarter GDP from the United States, expectations of reading of negative 10.1 or contraction of 10.1 to the German economy during the second quarter. After that, we have the German IFO Business Climate Index, expectations of a tick higher towards 92.0 from 90.5. Moving to the United States, the Conference Board Consumer Confidence expectations also of a slight increase towards 93 from 92.6. And then we have the new home sales from the United States. We're seeing a little bit significant improvement in the housing data in the United States. Over here, the new home sales are expected to rise to 786 from 776,000 previously. Also, the API, the American Petroleum Institute weekly crude oil stock, which showed also a contraction or a drop in inventories during the past week of 4.264 million barrels. And then after that, we move to New Zealand with the trade balance, where there are some expectations of surplus of 285 million. So this is on Tuesday. Moving to Wednesday, there is no it's a bit shy on Wednesday, with only durable goods orders from the United States to be in focus and the weekly oil report by US Energy Information Administration. On Thursday, we have the reading of the second quarter GDP from the United States, expectations of a contraction of 32.6, slightly higher than the preliminary reading of negative 32.9. Also, the GDP price index for the second quarter is expected to come at 1.4% from 1.6 previously. The US initial jobless claims to rise by around 1 million. They surprised highly to the upside during the past week after dipping to 963,000. They rose by 1.106 million during the week, the second week of August. And then we have the top, or the main event for the week that everyone is looking for. It is one of the key events that in the financial markets, which is the Jackson Hole Symposium, where top central bankers around the world will be speaking about their views on the recovery. And especially this year, it is going to be more interesting since we are dealing with COVID-19. So this is what will have could have the key impact on the financial markets. So first we have the Federal Reserve Chairman Jerome Powell will be speaking about the monetary policy frame. So this could have an impact on the dollar. And after that, we have the pending home sales from the United States, expectations of a rise by 4.5% during July. And also after that, we have the Bank of Canada Governor Macklem will be speaking also in the Jackson Hole Symposium. On Friday, it will be the second day also of the Jackson Hole Symposium. We'll talk about it in a while. But first, we have the GfK German consumer climate expectations of rise towards 1.9 from negative 0.3 previously, and then the PCE price index. We know that the PCE price index is one of the key gauges of the Federal Reserve in assessing inflation. Expectations of a rise by 0.5% in July. The personal spending also you should monitor carefully. Personal spending it's increasing by it is expected to have increased by 1.5% during July. The Canadian GDP month-on-month expectations for June, so the change from May to June expectations of an expansion by 5.6%. However, the GDP annualized for the second quarter is expected to show a contraction of 39.6%, which is massive. The second day of the symposium, we have the Bank of England Governor Bailey will be speaking. The Chicago PMI to tick higher towards 52.8 from 51.9. The Michigan Consumer Sentiment, or the revised reading of the Michigan Consumer Sentiment for August, 72.8, slightly changed to the upside. And we end the week with the US Baker Hughes oil recount, which shows a significant rise during the past week in oil recount in the United States. This is the strongest rise since early March. So this is all for the top economic indicators to follow, or economic releases and events to follow this week. Let's move now to the MetaTrader 4 platform. So first we're gonna start with the euro dollar, which failed to keep the break above the 119 level that was there last week. So we're still trading sideways near the highest levels in almost more than 2 years. So what you have to watch out for is these levels back previously 119 level and 117 level. Despite trading above the 119.74, the pair failed to have two daily closes. So if you're using the daily close as a filter, a double daily close as a filter, you weren't you didn't go with this fake out in the market. Currently, we're still trading in the mid region of this price of this consolidation zone, awaiting some fresh fundamental drivers. On the bigger picture, we're still trading inside this channel here, so this is also significant. So watch out for any play sideways in order to reach this this trend line. So we have this upside channel, and now we're trading sideways near the top. If we just add some of the key technical indicators, you can see how the Bollinger Bands are closing in here. We have this fake out, and then we had this reversal, the bearish engulfing candle, and we had another move lower towards almost 117.60. So this is uh, for the euro dollar. If we go for the H4 chart, we can see that the 100-hour H4, the 100 H4 exponential moving average is giving some support to the market. So this is the first support in here. I'll also buy for the second dip here. We had an ABCD pattern. This one is equal to this one, and now we're moving a little bit higher. However, we're finding some difficulty in continuing this uptrend. The RSI is almost near 50 level. If we go for the hourly chart, we can see also that the 100 and 200 hour exponential moving average are converging. So this would show that we are in the middle of consolidation, awaiting some fresh drivers. So let's highlight just the key levels if you are trading the euro dollar. So in addition to the 119 level and 117 level, so on the upside, we're gonna look for the previous high, almost 119.70, and after that we go for extensions near near almost 2080. So these are the key levels on the upside, and on the downside, following the 117 level, we definitely have to monitor the previous support of 1570, and after that near 115 level. So these are the key levels, the key resistance and support levels if you are trading the euro dollar. Moving to the pound. If we just have a look on the weekly chart, the pound failed to have any close above the weekly trend line that was formed by combining the tops of 2018 and 2019. So we failed to continue trading above above the pair. If we go for the daily chart, we can see how much indecision we have in the market. So bullish engulfing, bearish engulfing candle, then a little bit of a bullish engulfing, almost a little bit of a strong candle. However, also we had a bearish engulfing candle. So all the rallies to the upside were being sold. However, it's similar to the euro dollar. We had an uptrend and now we're consolidating inside this this area. If we go for the H4 chart, we can see that we are almost trading inside inside this channel, so it's a sideways move. So watch out how the price will react to this, or any break uh, break outside of this channel. If we go for the technical indicators, we can see also that the H4, the 100 H4 exponential moving average was providing support during the past couple of retries. So watch out for any break below this, because it is coinciding with the trend line combining the previous bottoms. So watch out for any break of this the support zone. The next support zone could come in near the 200 H4 exponential moving average near 29.45. So let's highlight the key numbers again. I'm going to remove all these. So on the upside, we have to focus on the previous resistance of 31.80, and again the previous high of the recent high of 32.70. So we have these two key resistance levels. Also, we have the trend line combining these tops, so it's around 30.50 level, and then we go for the 29.80 ahead of the lowest support near 28.13. So these are the key levels if you are trading the British pound against the United States dollar. Moving to the dollar yen, nothing much happening on the dollar yen front. If we go for the weekly chart, we can see a little bit of a weakness, a bearish engulfing candle during the past week. However, there is not much of a momentum in the market. If we go for the daily chart, we can see that we're almost trading sideways during inside a bigger candle that was formed earlier last week. Also, if we go for drawing some channels, we're trading inside big two channels here. So this is the first channel combining these previous tops and bottoms. So we are trading inside these channels. Watch out how this will play, the trend line, this trend line, and the one above it. So in order to, let's just add some technical indicators. We can see how the price founded resistance near the 100-day exponential moving average and dropped towards the lower band of the Bollinger Band, but still there are no clear indications from this. Even also the RSI is almost in the 50 level, so we're almost in a neutral mode on the USD Maybe we could be forming some formation here. So maybe we have this triangle formation. So yeah, better watch out how this will evolve. Also, we can see that the 100 H4 exponential moving average gave resistance, or provided resistance to the market in the recent two tries. So watch out how this will play in the coming week. In order to highlight some key resistance levels, the previous top near 1.620, and after that 1.705, and from the bottom we have the support of 1.510 and 1.420. So these are the key levels if you are trading the dollar against the yen. Watch out for this consolidation formation and these key levels. Moving to the Australian dollar against the US dollar, nothing much is happening in the market. We witnessing a little bit of a range in the market near these stops, but still the candles are the closes are near the open levels, so we don't have like something solid or robust in the market. If we just go for the H4 chart, you can see how the 1 hour, the 100 H4 exponential moving average was providing support to the market. So watch out how this will play. Also, you can just draw a channel here combining this the recent bottoms, and this will definitely take you also to the previous top. So watch out how the price will play with these with this channel. You can see how the Bollinger Bands were diverging and then converging, diverging and then converging. Since we're witnessing a little bit of a steep move, and then after that we're consolidating inside a certain zone. So watch out how the price will play during the coming week. In order to highlight some key levels, watch out for this previous level near 70, 75, and after that we have the 69 previous support of 69.20 almost, which was also the bottom of this consolidation zone. And on the upside, we have a minor resistance near 72.25. However, the resistance area is between these two levels, between 72.25 and 72.70. So these are the levels. Let's just go for a clear level on the previous zone. The 73.90. So this could be the farthest resistance in the market. This is for the Australian dollar against the US dollar. Moving to the New Zealand, we're witnessing a little bit of volatility in the pair. On the weekly chart, however, we can see the tails, the upside and the downside tail. However, the candle closed as dodgy, so it's a neutral candle. Going to the daily chart, we can see a series of lower lows and lower highs despite this high being set. However, it failed to have a key implication or a key effect on the market. We can see here that we have also this channel. The price is trading inside this channel. Clearly, we have a retest of the top and also the bottom. So watch out how the price will evolve from this channel. In order to highlight the key supports, the previous support near 65 level, and then the farthest near 63.84, and on the upside, watch out for this pivot point here near 66 level, which could coincide also with the top side of the channel, and then the previous resistance or previous high near 67.12. So these are the key levels that you have to watch out for if you are trading the New Zealand dollar against the US dollar. If we add some of the indicators, they're giving the same signal. We're witnessing a little bit of resistance, but still on the bigger picture, we're trading inside an equidistant channel to the downside. We're having lower lows and lower highs, so this remains valid until we have a close above the previous high or an extension towards further lows. So this is for the New Zealand dollar against the United States dollar. Moving to the Canadian dollar, the CAD is among the strongest among the commodity currencies. However, now today we're witnessing a little bit of a retreat from the previous low. So this is for the CAD. We have this trend line from the previous top from 2017, which is significant. So watch out how the price will play on the bigger picture. If we just go closer to the H4 chart and add some of the indicators, you can see how the price was finding resistance near the 100 H4 exponential moving average, which also could support in drawing a certain trend line. So watch out how the price will react to the trend line, since we are closing in. Here we're having a pullback on the H4. It's a clear candle with a clear momentum. So watch out how this will play, whether we're going to approach towards the 100 H4 exponential moving average, which coinciding with the resistance level. So every rally to the upside was being sold in the recent move. So watch out if we're going to break above the 100-hour exponential moving average and the trend line and go retest the 200 H4 exponential moving average, which provided also resistance during the past recent tops. So if you just go to highlight the key levels, so in addition to the trend lines and the moving averages, also you have to pinpoint the farthest near 3460, and then term one near almost 3275, and on the downside you have solid support here, which was retested earlier today near 130, 140, and after that we have the psychological level of almost 130. So these are the key levels if you are trading the Canadian dollar, the US dollar against the Canadian dollar. Watch out how the price will react to the previous lows. So we have a series of lower lows and lower highs. However, here we failed to break below the previous low, and we better watch out if we will be able to make or record a new higher high. So this is for the USD against the CAD. Moving to gold, also consolidation, sideways move. It's clear on the daily chart. We had a move. We're still trading inside the bigger candle of the first week of August, so we're trading inside it. On the daily chart, it is much clearer that we're having a sideways move inside this the big rally that took place from 2030 towards 1860. So we could be waiting for some fresh fundamental drivers. On the Jackson Hole Symposium fee could be one of the drivers if it gave some more additional information about the trajectory of the monetary policy of the Federal Reserve. So if you can also add the H4 exponential moving average, the 200 H4 exponential moving average showed a good support to the bulls and reviving the market and moving to the upside. And currently we were finding resistance near the 100 H4 exponential moving average. We can see how the bands, the Bollinger Bands, are converging to each other. The distance between the bands are closing in, so watch out for any break to happen. In order to highlight the key levels, watch out for almost 1910, and after that the 1860 level. And on the upside, we need to make a clear breakout above 1966 level, which we approached almost today. And after that, we could retest the previous high reached last week, 2015. So these are the key levels if you are trading gold. On the downside, 1910 and 1860, and on the upside, 1965 and 2015. We're currently trading near 1940 level of the 20 simple moving average, which is the middle band of the Bollinger Band. So this is for gold. Moving to WTI or oil, there is nothing much happening in the market. We're waiting for some drivers. For nothing much happening from OPEC or top oil producers. They are all almost committing to there is compliance with the promises over the production cuts. However, now we have to monitor how the tropical storm and the hurricane will affect the production in the United States, which it is already reducing production by around 1 billion barrels. So watch out how this will play in the market. We're still finding support near the 200 H4 exponential moving average. The Bollinger Band is still showing on the daily chart. If you can see, it is still showing a little bit of convergence. We're converging again after having this spike here, or this widening here, due to the spike that occurred during these 3 consecutive days. So we're still converging again, and the moving averages are getting closer to each other. We're inside this consolidation zone since early June. So traders should be waiting for fresh drivers. In order to highlight the key levels, we have the previous stop near 43.45 as a resistance. After that, we have the 48 level, and on the downside 39.10, and after a key support near 34.33. So these are the key levels. I'm just going to highlight this 48 level here, 48.50. So these are the levels for oil on the upside and the downside. Moving to the Dow Jones, which had a pretty good rally during the early trading hours of the week. So on the bigger picture, we had this trend line here. So we had the return towards this trend line and retest, and the market moved higher. However, this correction phase here, which was around, we were trading inside the channel for this corrective wave here, and then the market was able to break during late last week and the early trading hours of the week. So this was almost a little bit of a flag. You can see the stick, the flag, and now we're inside a continuation form. You can draw the expansion, the expansion, the Fibonacci expansions, in order to try to anticipate where this move could be going. So I'm just gonna do it together so you can learn how to do it. It's either you draw it from the top to the bottom and go for these extensions here. The 161.8 sits around the first, the 123.6 level sits around 28,222, and the 161.8 near 28,477, and the equal legs at 28,732. Also, you can draw it the other way around, so you're just looking for expansions here. So these levels 123.6 almost around 28,586. So currently we are trading near the previous during ahead of the breakout. We had a series of support found near 28,000 level. Currently we are trading above them. So in order to watch out for some resistance levels, you better watch out for the gap opened following the sell-off as the pandemic began, so around 28,899 or 28,900. And on the downside, you better watch for the previous support near 27,400, support of last week, which was almost also the previous stop here, which showed resistance. So these are the key levels. And further on the downside, we have support near almost 27,000 area. So these are the key levels. I'm just going to add the technical indicators so you can see how on the weekly chart the bands are opening, and we are tackling the top of the Bollinger Band. If you go for the daily chart, the top of the Bollinger Band is around 28,500, 28,470, and we found support near the 20 simple moving average. So watch out if this will come and play like this. So watch out if we are moving inside this upside channel. I'm just gonna zoom out and then highlight the key levels again. So we have the gap here near almost 28,900, and on the downside 27,369, and the previous tops near 27,000, which is almost close to the psychological level, and after that we have 25,853. This is on the very bigger picture for the Dow Jones. So on the upside, 28,900 and new highs near 29,500, and on the downside, 27,300, 400 almost, and 25,853. These are the key levels on the bigger picture. If we can highlight closer ones, so on the hourly chart, the previous dip, 27,000 to 27,388. Also the recent dip, recent rally, 27,900 or almost 28,000. We can draw some trajectories. So watch out for first resistance near 28,230, and after that 24,480. So these could be the key levels if you are trading the Dow Jones. So this is all for today. If you have any questions, please write them down so we can discuss them. I'd just like to remind you that all the information, analysis, news, and opinions mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. So this is all opinions that should serve in helping you how to assess, how to do your own analysis. So this is all, it is not an investment advice. If you have any questions, please write them down. So if you have any questions, please write them down. I'd just like to remind you that for those who joined late, that we have a key event this week. This is Jackson Hole Symposium, where top central bankers will be talking about what they are facing, especially it's interesting since we are facing COVID-19. So this could have could affect the market. So how central banks are tackling the impact of COVID-19. So watch out for this key event coming on Thursday and Friday. Okay, perfect. So I would just like to remind you one more time that all the opinions, analysis, news, and information mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. On Wednesday, we are holding a new educational webinar talking about channels, so price channels. You know, we have different types of channels that you can draw on the MetaTrader 4 platform using different types of analysis or different calculations. So you have you can join us on Wednesday for this new educational webinar, and this is all for now. Thank you all for joining, and stay tuned.